Good afternoon, ladies and gentlemen. This is Michael Camo from T3 Live. Can I get a 22 in the chat if you can hear me? Type 22 in the chat if you can hear me. I just want to double check. All right, cool. Thank you, guys. How is everybody doing out there? I know it's a wild market, lots of ups and downs, and hopefully we can bring some clarity to your trading, especially if you are a day trader, because this market it's so tough to hold overnights. We're seeing day traders having more success, and Sammy's going to teach you one of his best day trading techniques. He's going to come on in just a second. Let me get the formalities out of the way. Just read the disclosures very quickly. So how is everybody doing out there? What did you think of the market today? Did you have fun? Are you frustrated? Getting aggravated? Making money? Let us know, just so we can get an idea of what kind of crowd we have out there today. All right, yeah, everybody's saying crazy, nuts, never seen anything like this. Yep, everybody's pretty much on the same page. So just a warning, the results you'll see in this event are not necessarily indicative of future performance, and they really reflect Sammy's experience and talent as a trader. We just want to emphasize that because this is a tough market and we don't want you to go overboard. So just so we have that clear. So housekeeping items, a lot of people are asking, are we recording this event? Yes, we are. We are recording. We will send you a replay later. So turn off your TV, your smartphone, your trading platform, any of all that stuff, because we are going to give you an opportunity to take your trading to the next level. And Sammy's lesson really is awesome, especially if you want to make more money day trading. So please pay attention. Please take notes. So I'm sure many of you guys know Sammy. Anybody in strategic day trader or swing trader, any other programs? So let me tell you a little bit about Sammy. Sammy's been a pro trader since 2007. He's head of our strategic swing trader program, strategic day trader, earnings engine, mentorship, and his expertise really runs the gamut. He's also, fun fact, a former certified public accountant. So he has had two polar opposite careers. He's been an incredible trader and a fantastic accountant. So I am going to pass the mic over to Sammy. Sammy, how are you doing tonight?
Mike?
Yep, we can hear you.
I'm all set. Let's go ahead and get started. Hi, everybody. Good afternoon. Hope you are doing well. Hope you had a great day. I'm going to talk about my favorite topic. It's prepare to have your minds blown. Okay, but as Mike said, the results are not typical. I don't want you to go out there and expect to make the same kind of returns tomorrow. This takes time, experience, but the truth is it's totally doable. I do it every day on the mic. I'm on the mic. I mean, I'm on the mic how many hours a day? Like 5 hours a day sometimes. And I do it while I'm on the microphone. So if I didn't even have the microphone, it'd be even better. So I want to talk about scalping, because this is what this market is about right now. It is about scalping. It is for serious traders. There's a misconception that scalping results in small profits, that you get in here at 22.10 and you get out at 22.11. Not necessarily. Or that it is not a valid strategy. It is totally a strategy. Or that it is stressful. It can be, if you don't know what you're doing, it can be. And number 4, and the list goes on and on and on. Number 4 would be that, what was I going to say? There was one more. This is what was I going to say? I was going to tell you one other thing. But basically, there's a lot of misconceptions about scalping. This is what I was going to say, that it is risky. It is not. It is actually, that's what I love about it. It is not risky at all, if you know how to do it. Okay, so I want to teach you how I do that. Okay, let's continue. Nothing could be further from the truth, as I said. Nothing could be further from the truth. P&L put it together last night, just took a picture. last night, past 7 days. This is my E-Trade account, 148,360. That's 148,000. That is okay. I opened the account on March 6th, I believe. Started trading it March 9th, which was the beginning of last week. Through yesterday, it was up 148K. I opened the account with 105,000 to be exact, 105. That's the E-Trade account. Here's my T3 account. Net, as you can see, just since March 9th through yesterday is 47K. Okay, that's 195 net after everything, after all expenses, in 7 trading days. While the market is dropping a lot on every other day, I guess, the truth is I've probably made way more money playing long than short. Probably way more money playing long than short because there's just so many good bounces, like huge bounces. Did you see this afternoon the huge bounce we got? Well, that was could have been played. Some of the stocks that had some significant bounces today were just like unbelievable stuff, like TWO, right? TWO is just amazing. What was it? IVZ. I mean, just unbelievable stuff. Love it. I'm enjoying it big time. Let's continue to talk about scalping. I'm pretty hyped up. I netted 47K today, just today. So just, pretty hyped up. I hope you enjoyed today's presentation, because I think, and you really take it to heart, because this is what's making the big money for me personally right now. Scalping is mainly looking for unidirectional trends that are going in the same direction, and then scalping the microcycles cycles within those trends. Some of you might wonder, well, why not just stick with the trend and not worry about scalping the microcycle? For one main reason, which is if I knew how much it was going to go for, I'd stick with it. Yes, if I knew where the bottom or the top was going to be, but I don't. And so anytime the cycle appears to be wanna end, I get out. When it starts to look like is going to go back up, and then I get back in. So it's scalping the microcycles. It is beautiful right now because not only because we have volatility and we have stocks that collapsed and are bouncing back a lot, but it's also beautiful because it's a zero commission environment. I don't know if this zero commission environment is going to last forever, but it is so perfect for scalping because you don't pay anything for the most part, right? Some brokers charge a little bit. I have an account with T3 Trading. It's not a zero commission account. I'll just tell you the truth. E-Trade, on the other hand, is almost zero, but not quite. And then the third step would be using the level 2 screen to perfect your entries. Okay, so finding unidirectional trends, then scalping the microcycles within those trends, and then using the level 2 to perfect your entries. We'll get to the questions. I'm looking at some of the questions. We'll get to the questions at the end. Mike will go over them one by one, and I'll stand by and answer them all. Okay, so feel free to type them in right now, and Mike will get to the questions later on. This is the kind of trend that I like to scalp. Long, beautiful uptrend, stock that's riding the 8 MA, riding the 20, and all above the 200 MA. This is called a power trend, actually. This is what's known as a power trend. A rising stock above a rising 8, above a rising 20, all above the 200 period moving average. I mean, it is just a picture of power, true picture of power. Shorting, this is an ideal picture. I call it the 8 MA train. There's nothing more elegant than the 8 MA run. It only takes one of these a week to make a small fortune. That's the truth. Now, if you scalp every move. Now, if you say, well, no, I was sure about this continuing lower, then great, keep it. No problem. You don't have to scalp it. Okay? Your job when you find trends like these is to jump on board and ride the momentum train to a desired profit target, usually until the stock goes climactic or the downtrend ends. Before it ends, you start to see big volume usually, like we have here at the bottom, far right corner. So you either get the big volume or you get the acceleration. Again, nothing more elegant than this kind of a trend. Just perfect, right? Shorting. You short every breakdown, every sell setup, as long as it's at or near the declining 8 or the declining 20, whichever moving average the stock is trading off of. Whichever moving average the stock is trading off of. Okay? So this is the correct entry, is to short every rally or every base breakdown into the moving average. If you do that and you have a power downtrend, it is really hard to lose. Honestly, it really is hard to lose, because these trends continue on and on and on again until they usually accelerate. So figure out to get into the stock. Do not waste the opportunity, basically. Do not throw away free money. Now, what kind of daily charts generate these kind of moves? It's gaps, failure patterns. That's the daily time frame, right? Failure patterns, something that has a lot of shock value, where the stock went against the expectation. Notice the stock the day before was looking like it was going to break out, and the next day it gapped down and then just took out the lows and took out support. Okay. A climactic is when the stock accelerates and separates from the moving averages. That's what a climactic is. It's a parabolic acceleration away from the moving averages to the point of exhaustion, and you get that last huge sell-off, huge volume, which is indicative of panic selling. When everybody's out, then guess what? It doesn't really take much buying to put the stock back, for the stock to go back up. That is what the definition of a climactic is. Just answering a quick question there. All right. Again, these are the kind of daily charts that I like to focus on. The best power trends come from daily charts displaying significant failure patterns. I use the 1 minute chart to short all counter rallies and breakdowns. Okay. The correct entry can be either a breakdown or a sell setup. It doesn't have to be one or the other. The key thing is, I'm going to actually go to the next slide, probably easier, and take out the drawing tool here. This is not going to be a long lesson, by the way. Let me just see if I can. Here we go. The most important thing I can tell you about scalping an uptrend or a downtrend is to short it not when it takes out the lows. Not when it takes out the lows, because if you do that, shortly after you get in it, goes right back up and you're down money. Shortly after you get in it, goes back up and you're already down money. The right way to do it is, if you get a sell setup, is to short it under the last bar's low, under the last bar's low, under the last bar's low, under the last bar's low. Once it takes out the last bar's low and it's at or near the declining 20 MA. If you're playing long, the other way around, obviously. I like to play short more than to play long, but in this environment, honestly, I'm making more money playing long, because we get these ginormous bounces, especially towards the end of the day. Same here. The correct entry would have been right here. Not under the lows, because you get in under the lows and then goes right back up, shakes you out, and then drops again. Now, why do people look to always short under the low of the day or under the prior pivot low? They go short here and they make a little bit of money and then goes right back up against them and they get out. They go short one more time, maybe it makes a little bit of money, but before they can get out of it, it goes right back up and they lose money. Why is it that we have a tendency, traders, people have a tendency to short or to play long once the stock makes a new high or a new low? Why is that? Why is it? And what I'm saying is that's the wrong way to do it. It is because somebody's saying fear of missing out. No, no. What I'm saying is, why is it that they short the low and not the sell setup right here? Why is it that they short under the prior low rather than the sell setup? And the reason is we all have that tendency to do that. And the reason for that is because we want to do it when it feels comfortable, when it feels safe. We want to get into the stock. When does it feel safe? When the stock takes out the lows, takes out the support. Does that make sense? When it takes out the support, that's when we feel, oh, okay, now it's safe to short it. But the market doesn't pay us to do what's safe, what's comfortable. If it did, everybody would be a trader. Does that make sense? So what you need to do is step up as soon as, it's like a wave. As soon as the wave starts to head down. Not wait for it to take out the prior support, because that would be the wrong place to short it. So this is a huge, huge deal. And it's probably one of the main reasons why a lot of scalpers don't make money, is because they're trying to scalp, trying to feel comfortable getting in. You don't want to look for comfort. You don't want to look for certainty. Oh, the stock has just made new lows. There's no support. Clean air to the left. Let me short it. Nope, not necessarily. Now, if the stock was basing, then you can do it. Sure, no problem. Under the base, if it was basing right off the declining 20, no problem at all. But oftentimes they don't base. They go up and down, up and down. Does that make sense? If it has that back and forth ebb and flow, then don't wait for the low of the day to break. Short it as soon as the stock triggers a sell setup. It triggers a sell setup as soon as the prior bar's low, the last bar's low on the way up, is taken out. So right here. Okay, and if you don't like it, like this wasn't very good, if you don't like it, don't do it. No problem. If you don't like it, you don't have to do every single one of them, but the truth is, the vast majority of them work. If it is coming off of either the 8 or the 20 MA, whichever. I mean, sometimes it's when the trend is really sharp, steep, it's going to trade off of the 8. I use the 8 and the 20, but most of the time it's going to be off the 20, because the 8 is not sustainable. Your job is to short every single sell setup and every single breakdown. Not one should escape your attention. Okay? But you don't want to treat a sell setup like a breakdown. You don't want to treat a sell setup like a breakdown. That's the key thing. This is the picture you want to be looking for when you're scalping a stock. This is the picture. In this case, I'm calling this the golden chart because this was a scalp that luckily turned into a climactic. Just fell apart while we were in it. Beautiful, wonderful. So you get rewarded for shorting something that's weak or buying something that's strong, because sometimes you go long and then it pops really hard. And this would be the kind of the meat of the move. Beautiful. Sometimes they don't fall apart like this, but when they do, you're in it already. Cool. Wonderful. Yeah, so that's it. Now, when it comes to the level 2 screen, what do you look for? So let's first spend just a minute here learning about what this is called also depth of market, right? Or market depth, some platforms they call it. Historically, in the past, it was always just called level 2 window. Now, level 1 would be this. This is the level 1 data. Level 1 data gives you the low, L for low, the low of the day, the high of the day, the current price. I don't even know where the current price is on this, but that's level 1 information. Level 2 shows you the current bid, offer, and the volume. So when I'm looking to play long, I am looking for a really strong bid. Notice that 46,000 shares right here. I know you don't see the entire amount, but here's the total. 50,000 shares on the bid, 50,700. On the offer, only 3,700 shares. Perfect. So when I see a level 2 like this, and I'm scalping a trend up and move up, I'm gonna play long immediately. Buy the offer. This is called the offer. Those are the sellers, and this is called the bid. So clearly, we can see a lot of buyers and not very many sellers. Now, if the stock was just going sideways, not really moving, and you see this kind of disparity, or or discrepancy, or whatever, the imbalance is what I like to call it, between the bid and the ask, then it may not mean anything, really. Might not mean anything. But if the stock is moving up and I see a really strong bids all the time, at every move up, I am consistently seeing strong bids, guess what? That probably does mean something. Okay? So this is the kind of level 2 that I look to play long, that I look for when I'm playing long. This is the kind of level 2 that I look for when I'm playing short. Really strong offer. Look at the total volume. 30,000 shares on the offer, only 16 on the bid. That's the kind of level 2 that I use, that I look for when I'm playing short. Okay, so just, I hope that's clear. I can keep going. I can show you a bunch of these. Strong offer, weak bid, stock is in a downtrend, I'm shorting it. Stock is at the declining 20, I'm shorting it. Stock has a sell setup or a breakdown, I'm shorting it. Does that make sense? So that's what I look for. I want to kind of end this by sharing with you my top 10 rules for scalping off the level 2 screen. First, the stock cannot be jumpy. So if you find this gorgeous uptrend or downtrend and the stock is jumpy, please don't try to scalp it. It just doesn't make any sense. You get in it and it jumps and you're already down 5 times what you intended to risk. If the stock is spready also, this is why it often is good to look to scalp the low price stocks. Liquid, very liquid. Like in this case, it had done 7 million shares that day, right? This one has done 2.5. So I want to scalp the liquid stocks, but oftentimes they're low priced, because if $80, $100, $200, they're going to have spread. And you're trying to capture the microcycles, and if they're spready, you're not going to be able to get in exactly where you want to get in, or get out exactly where you want to get out. It's just not the right way to do it. So if the stock is jumpy, spready, or illiquid, I stay away. I don't scalp it. And number 3 is level 2 must have that imbalance. If you're playing long, really strong offer, weak bid. If you're playing short, really weak bid, strong offer. I also only scalp things that have a catalyst. Daily is a gap down or a gap up. There's a breakout on the daily chart. Some kind of a catalyst. This is not 100% of the time, because sometimes also the market could be the catalyst. The coronavirus is the catalyst right now, right? So like some of the biotechs exploded, even on days when they didn't even gap. Why? Because of the virus thing. So otherwise, I only scalp when there's a catalyst. Number 6, must have momentum. Momentum means you get solid bars, no tails, and they're not very small bars. Like, they're not just doji bars. That's not momentum. Momentum means nice, solid, healthy size bars. Nice solid green bars, nice solid red bars, and they follow the same color. You don't get the Christmas tree effect. Green, then red, then green, then red, then green, then red. That's not momentum. You want green, 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 red, red, red. That's what you want to see on a stock. If I don't see it, then I don't even bother looking at the level 2. I just move on. Okay? Must have a trending 20 period moving average. If the 20 is flat all day, stay away, is my mantra, or something that I came up with. If the 20 is flat all day, it means the stock is not a trending stock. It's not trending. Stay away. You want uptrends or downtrends. And then always scalp with the trend. sometimes you can look to capture the bounce back up here, no problem. But most of the time on these kind of days, I'm scalping actually the breakout, like like so. The market is broke out off the moving averages. I'm going with the breakout off the moving out off the smaller time frames. Again, sometimes you can capture the bounce back up, no problem. But when I play against the trend, I'm playing it as a climactic, like Cody today, or I don't know what else, like MIK today, also long off the climactic move. All right, but most of the time you're better off playing just with the trend and ignoring the counter trend moves. If the stock happens to go climactic, just think of a waterfall. Down like this, that's the river above the mountain, and then it cascades. That's what a climactic is. When you see that, then you can look to scalp it long, but most of the stocks, they don't do this. They just go down and maybe end the trend like so. So you're better off scalping with the trend and not against it. The only exception would be when the stock goes totally climactic. Number 9, stop scalping if it goes climactic and gets the volume. If a stock is moving down and then gets this kind of volume, the spike in volume at the end, the trend is probably over. Okay, the trend is probably over, or this kind of a trend, this kind of volume. So stop scalping it to the downside. When you get the volume, it's probably over. Okay, spike in volume. So just keep that in mind. That's kind of your sign that to not scalp it anymore. You can continue, but as soon as it stops working, just understand that it's probably because it's over. The trend is over. And also stop scalping if momentum is lost. Sometimes I get into plays, amazing plays at the open or in the morning, and then at lunch they just lose the momentum, start going sideways. How can you tell? Again, if you get red green, no continuity, that means there's no momentum. If the moving averages go flat, whatever moving averages you use, I use the 8, the 20, and the 200. The 200 is just a long-term moving average. It's not relevant so much for scalping, but the 8 and the 20, when the 20 starts to go flat and the price starts to crisscross it, to zigzag through it, then you know it's the trend. The momentum is over. Okay. Somebody asked me in the room, what about share sizing? How do you do it? The share sizing, I'm mostly risking just a couple of cents, maybe up to 5. So I can have a lot of shares given the fact that I'm not really looking, I'm not gonna let the stock move against me but by more than a few pennies, which is why scalping works really well. It does require the things that we talked about. It does require that the stock is very liquid, doesn't have any spread, is not jumpy. Otherwise you get in long 10,000 shares and the stock jumps up or down against you, let's say, drops, then you can get hurt badly. So it does require that these are really important. Okay. But in terms of share size, normally I share size for like a 5-cent stop minimum, and 5 cents. I risk $500 per trade, so that means 10,000 shares per trade. Do I really scalp with 10,000 shares per trade? No, I don't. I don't even do that. Most of the time, it's a few thousand shares, 2, 3, 4, 5, at the most. Most of the time, I'm on the mic. I'm doing other things sometimes, and scalping at the same time. That's how you can also keep it not so stressful. And I want to make sure I get filled. All right. So I hope you enjoyed what we've discussed so far. I'm going to hop off the mic. Mike is going to come back on. He's going to read through the questions for me, and he's probably already kind of jotted them down, and I'll come back on and answer all the questions. Okay. But Mike, back to you if you're ready.
Okay, guys, I hope you enjoyed Sammy's lesson because he's showing you a great way to make money right now, which has been fairly difficult for a lot of people. A lot of people are struggling, so we hope you at least took away a few things that can help you make money. So if you want to trade alongside Sammy, if you want to get the actual trades he's doing, we have an awesome opportunity for you. So we're going to invite you to join the Strategic Day Trader Room. This is Sammy's live trading room where he's giving out ideas, where he's sharing his analysis, and it's live video, audio, and chat during market hours. So again, you get his day trades with crystal clear instructions. So you get his actual scalps, plus weekly coaching, which is very important, which I'm going to discuss in a minute. So again, you get expert guidance from a trader making real money, because you don't see many traders showing their P&L at all, let alone a time like this. And I don't count those guys on Facebook pretending to have private jets. Like you've seen, Sammy's a real trader making real money right now. You get his scans, his watch lists, and the room runs from about 9 to 4 Eastern time each day. This is what the room looks like. So like as I took it, Sammy was showing charts on the screen, chatting with the room. And again, why is now the time to join? It's simple. We are in a day trading market. There were huge opportunities today, but you have to be fast. You do have to be very fast in a market like this. Holding overnight longs can be a little risky. And the easiest thing to do might be just piggybacking off of Sammy's best intraday trades. And don't forget, you also get coaching. So you can bounce ideas off Sammy. You'll understand what's working now. You get answers to your biggest trading challenges. And these are real room messages from today. I know MIK was, I think it was the biggest trade of the day in the room. And you can see what people are saying right here. Jen said, nice MIK. Wow. Thank you, Sammy. Couldn't get filled much, but thank you. Again, everybody's thanking Sammy for this trade. Delta Airlines, another big mover today, another home run. LADR, another nice winner. Terry said, thanks, Sammy. You're awesome. A lot of great people in the room. Great for us newbies. So if you don't have a lot of experience, if you want to get some assistance, this is a great opportunity. So the regular price is $195. But if you sign up today, we'll give you $146 off your first month. So your first month will be just 49 bucks. I'm going to shoot you the link. So just go to t3live.com/scalp, t3live.com/scalp, and you can sign up today. It's just 49 bucks. And we think this is the best deal you can get for this market. If you are a day trader and you are looking to take advantage of those huge intraday rips, this is definitely something to think about. And if you have any questions, you can go to info@t3live.com. Just email info@t3live.com and you can get started. So I'm just going to pull up just a chart on the screen of Delta Airlines, just so you can see the crazy moves. This is all opportunity. The market is so active intraday that this is where you want to be. And so what's the catch? There is no catch, but this is for new subscribers only. We have a couple of T3 prop traders in the audience asking questions. If you're a prop trader with T3, or if anybody else with any questions, email info@t3live.com. We'll treat you on a case-by-case basis. So again, just $49 for your first month, $49, t3live.com/scalp. This is the best way to start with Sammy. And after the first month, it renews at $195 a month, but only if you love it. You can cancel at any time to avoid future charges. No discount code. Again, just go to t3live.com/scalp. t3live.com/scalp, t3live.com/scalp. You don't need a discount code, anything like that. So is my friend Sammy, are you there?
I sure am.
Okay, so what exactly did you do with Delta today? Was that a long or a short?
No, that was actually called it a short in the morning, and then in the afternoon I said it's going climactic if you want to look for it as a flip. But the home run was really the short in the morning.
Yeah. So I mean, this is like, I think a lot of traders talk a big game about how they want more volatility, and then when they get volatility, they sort of freak out a little bit. But I think everybody can see that Sammy is actually getting it done. So Sammy, I think so. Here's a very important question. So, are you showing your actual entries when you're talking about scalp trades?
Correct. Sometimes, especially in this market environment, at the open, I might just give them verbally without typing them in the room. I might say, guys, I'm entering this stock at this price and putting my stop at this price. So I will say it on the mic because sometimes at the open, I don't have the time to type it in. But yes, I'm sharing the exact entries that I'm using as well.
Okay, and yeah, so and a couple of people are asking, do I have to be on a computer? Can I do this on a phone? Yes, you can. You can join the room. It does work on iPhones and Android mobile devices. So if you have an iPhone, iPad, Android, Samsung, whatever, you can use this. Okay, so now I'll give this person the best question I've seen today. So how do you know the bids and offers are not fake? Like how do you
Um,
know it's not HFTs or whatever screwing around?
because oftentimes I watch it for a minute before I commit to the trade. But let me tell you this, when there's a lot of volatility, trust me on this, HFTs are not screwing around because they're getting screwed when they screw around and there's a lot of volatility. It only becomes smoke and mirrors, so to speak, when it is dreadfully slow, and so they can kind of try and manipulate it. But when the market is moving a lot, they can't manipulate it. They actually turn off their algos because they start losing money. So that's how you know. But I do recommend watching it for a minute or two before you actually commit to it, and just make sure that and just look at it and say, does it stay consistently strong bids, weak offers, or does it flip a lot, fluctuate a lot? Weak offer one time, then strong offer. Then does that make sense? So if it stays consistent, then you're good. You're golden.
Okay. So what? So a lot of people are asking, like, what kinds of stocks are these? Are you doing this with big caps, small caps? Is there a specific type of stock?
Honestly, every cap possible. Yesterday, somebody asked me, "Do you often like to short real estate? Or play real estate?" We played actually long real estate yesterday on bounces. I didn't know I was playing real estate stocks. I just noticed that this sector is hot, and I traded it. 90% of the time, I don't know what the company does. I don't know their names. All I see is the chart. So I don't. So I do liquid. This is one thing about me though that you need to know. I don't do illiquid stuff. I just don't do it. I shy away from spready and jumpy stuff. A lot of people, want to trade Google and Amazon and today on the list, the MDB was on the list. I just don't even bother. Or the coronavirus stocks, I don't even bother unless it's really liquid like Guild, OPK. Those were INO. We traded those. Those are liquid, but some of the other illiquid ones, the ones that have incredible spreads like 30 cents, 40 cents, I don't do that stuff, guys, because I'm risk averse by nature. I just am. I'm risk averse. So for me to be a trader, I'm already uncomfortable, so to speak. I'm already pushing myself to be a trader because my nature is don't take risk unless you absolutely have to. That's my nature. And I'm an accountant by trade. Being an accountant, you don't take any risk. You just go by the numbers, and everything should add up, right? So with trading, it's more of an art. Not I can't find two trades that are exactly the same, and so you have to kind of, even though sometimes the trade might not be perfect, I'm still going to pull the trigger, especially if in an environment where the volatility is huge, meaning, you get it right, you make a lot of money. You get it wrong, okay, you're using a tight stop, you lose a couple $100, no problem. You get it right, you could make a couple $1,000, 3,000, 4,000. So just, if you're really interested, I mean, this is really for serious traders. I don't want to have people in the room wasting my time or wasting their time. But if you're really interested in this, check it out. It's free. I mean, really, I don't want to say free, but because it's not free, but it's almost free. The first 30 days, and just check it out and see what you think. If it doesn't make you 10 times what you put in, cancel your subscription. I mean, I'm serious. It's an amazing time to be a trader, and I have the numbers to prove it. Okay, Mike?
Yeah, so I'll actually answer the next question, which was like, I will, hold on, I will select very quickly. So somebody said, like, what about your losers? And I'll show you, it's on the screen. You can see these, we're not going to show you, these statements are literally like 10 or 20, 12 pages long. So you could see there are losers in here. So these are net numbers. Here's another one, minus 927. So these are 100% real numbers. We've seen the statements. This is no joke. So, so Sammy, here's a good question. How long are you holding these trades?
It's incredible. Some seconds, some minutes, or even half a day, or like CNK yesterday was a climactic long. I mean, we held it for a couple of hours, even though we didn't think it was going to go for a couple of hours, but the stock just skyrocketed. It was the best play for me yesterday, CNK. So it depends on how long of the stock goes for, and you just kind of trail it. That's it.
Okay. So folks, again, this is just 49 bucks, 49 bucks to get started. So like, we don't think you're going to find a better deal than this. And this is the only place in the universe to get Sammy's trades. So we highly suggest go to t3live.com/scalp, t3live.com/scalp to get the offer. It's unbelievable. We think for $49, you can't do much better than this. So I will take just a couple more questions and then I'll let you go, Sammy. So Sammy, here's a good one. Do I need to be glued to the screen all day long?
So here's the thing. I'm an advocate of taking time off, like at lunch, taking a walk, actually getting something to eat, taking it easy. But look, the truth is, would I rather be eating a tuna sandwich or making a couple $1,000s at lunch? So right now I'm glued to my screen for sure. During the rest of the year, when it's not this active, then yeah, I don't think you should. I think you should take breaks. You should enjoy your life. You should enjoy yourself. Take it easy. Don't, sure. But right now, every minute counts for me. Every minute that I walk away, I might miss out on an opportunity. So right now I am glued to my screen. Do whatever you want. If you want to just trade the open, trade the close, those are the most usually profitable times, the open and the close, and then take the rest the rest of the time off, or do something else. Up to you. Right now I'm making money at any given time, at the open, at lunch, afternoon, late afternoon, early morning, late morning. So I'm not taking any time off. I'm glued to my screen.
Okay. All right. Okay. I think that is a good note to close out on. So everybody, thank you for coming out tonight. Sammy, thank you. And everyone, we will send you the recording this event. Sammy, thanks. Wonderful as always.
Thank you so much, guys. I really appreciate it. And really, I just think you should give it a try. It almost doesn't cost anything. And see if it doesn't make you tenfold what you put in, then maybe it's not for you. but I feel I can't give you no guarantees or promises, but I feel sure that you're gonna like it and benefit from it tremendously. All right, thanks again, and have a good night, everyone.
Thanks, everybody.